right to there so we see all of the screen. There we go. Seeing all the screen. Cool beans. All right, so now we get YouTube back working again. Well, sorry guys for being late, but let's keep on keeping on. All right, that being said, Walgreens, let's take a good look at it. Before we go much further with the chart, because the chart's okay. It's not at the high, it's not at the low, it's somewhere in between. That's okay. Let's take a look at next week's numbers, because we know this week's only 3 days left. It's not going to give you a good return this week. It's only 3 days. So next week, what does it look like? Well, we're currently at 985. So you get two choices. You take the 950 or you take the 10. Well, the 10's giving you almost 3%, 29 cents. Now, 29 cents, I know it's not a lot of money, but 29 cents on a $10 stock, well, $9.89. That's almost 3%. And didn't we just do a stock like 2 seconds ago that was 3%? Well, here's another one, 3%. Works for me. I actually own Walgreens. Now, so we know the numbers look good. Great. Now let's look at the chart and see if the chart makes sense. So let's grab this, get this out of the way a little bit. And a year ago was the high of the year. And that was 2380. Okay? 2380, the high of the year. Then she drops. Fine. Now, the last 90 days. Okay, here's the high. Here's the low. Here's where it was. Here's where it is. Look at the movement. Sideways up, down. Where are we now? Now, I'm okay with buying Walgreens right here. And as far as I understand, I'm going to be honest with you, I'm not 100% sure where they are at the moment with the buyout offer. Because there is a buyout offer for Walgreens. Somebody wants to buy them and take them private. Okay, fine, that works. So let's keep on going. Last 30 days. Last 30 days, here we go. 30 days ago was the 30-day bottom. Shoots up, here's the high. She drops down. We're looking for a new bottom right there. Thursday, Friday's higher, today's higher. That's 2 days to the upside. So tomorrow, depending on where she opens up, it may be a good opportunity to jump in. If you do decide to jump in, make sure you do your research. Make sure you take a good look at what are the numbers. What do they look like? Do they make sense to you? Are you willing to hold on to it for a long period of time? These are very valid, important questions. We're back down to 40 again. We're going to reboot again. This is just crazy. Crazy. Because every time I reboot, I get more people in. Okay, let's go there. Come on. Well, no, that's lovely. I'm having nothing but problems tonight. How are you guys over there on YouTube today? No comments from anyone? Let me try this one more time. This is getting a little ridiculous. Okay. All right, so welcome. Oh, look at this. We actually have questions over here. AJ, have you heard of the Freemasons? Yeah, no, we're doing dividend stock talk, dude. We're not doing anything other than that. Do the truffles. Oh my God, we're not even gonna deal with that. Don't hit me up with that silliness. All right, so I actually like Walgreens. I do have some Walgreens, and I did buy some this week. Now, I own a bunch a couple of weeks ago, and I keep rolling it forward because I consistently get over 1%. So over 1% every single week with Walgreens, well, why not just hold on to it? Well, that's what I plan on doing it. Just keep holding on. AJ. Okay, AJ, you bought Walgreens too. Good for you. Wonderful, wonderful. Okay, questions. No questions so far. All right, so that being said, let's actually do a trade on Walgreens just to see what it looks like and see what the numbers look like. Okay, so Walgreens, let's get this out of here. We're going to do one at $10. So we're going to get rid of this. We're going to go cover it. So let's record this one too. We're going to do a quick trade on Walgreens, so pay attention quick, see what it looks like, see if it sounds like it makes sense to you. We're going to take a look at the covered call. And here we are right now. It's currently at $9.85. So we're going to buy it at $9.85 first thing in the morning, and then we're going to sell somebody the rights, not the obligation, the the rights to buy it from me at 10 bucks. So coming down here, here's the $10 strike price right there. Now, when you're doing a covered call, you're buying the stock and selling the option at the exact same time. So first thing I want to do is I want to change it from 10 contracts down to just one contract. And then I want to change it from a limit order to a market order because I want it to fill instantaneously. Walgreens, PayPal, no. Workday, no. Ford, yes. Baidu, no. Nike, yes. AMD, no. Are my main positions right now. Okay, that's cool. Adobe, no. Sorry, I'm pretty strict on what I do. I'm looking for companies that are consistently profitable, that have been in business for decades, maybe a half a century. So the company here, Walgreens, it's been in business for 170 years. I'm okay with it. 8,700 stores worldwide. They actually have products in over 22,000 stores nationwide. All right, Jonathan wants to take a look at US Steel. Jonathan, hold on. We're going to take a look at US Steel next. Let's finish up with Walgreens first. Here's the order right here. I'm going to click and send and read it to you so see if it makes sense. Here we go. You ready? Buy one covered call of Walgreens, WBA 100s. That is the weekly. 14 February, which is next Friday. $10 call against the WBA stock, which is the Walgreens stocks, at the market to open. That's the order for tomorrow morning. All right, so my maximum profit, 46 bucks. What is it costing me? 954. What is the rate of return for the next 10 days? Now remember, today is Tuesday night. So tomorrow morning is Wednesday, which means we only have time value for Wednesday, Thursday, Friday of this week. Doesn't make sense. So we're going to push it off and do next week. So we have 10 days of time value. Make a little bit more money. All right, so let's see what it says. Bring up the calculator. Calculator. Here we go right here. Okay, the maximum profit right here, $46 per contract. 46. And to find out your rate of return, you take the profit and you divide it by the amount that it cost. And this says cost of trade, including commissions and fees, $954. $954. And that gives me a grand total of, are you ready for this? 4.8%. And that's for just 10 days. So if I do this every single week, well, I like Walgreens. This is the reason why I've had Walgreens for the last 6 months or so. I'll buy it and I'll trade it every single week. I'll sell somebody an option, a weekly option, every single week. Well, this week it's giving me over 4%. Well, 4% on a weekly basis. Now, I just showed you 3 trades. 2 of them over 3%, and this one over 4%. Well, most people say, well, I'd like to get over 20% per year. 1% a week is over 50% per year. So we took a look at Walgreens. We took a look at, oh my goodness, I don't even remember anymore. That's funny. CVS, yeah, we looked at CVS. All right, never mind. Anyway, so if you like it, great. Does it make sense? Yes or no? Okay, number one question should always be, does this make sense? Okay, if not, then don't do it. It's actually that simple. Okay, AJ wants to take a look at Adobe. Isn't that ADB or is it ABD? No, ADB. Okay, we'll take a look at Adobe. Hold on tight. So yeah, I actually have some Walgreens. I roll it over every single week. It gives me over 1% every single week. Now, we all know there's 52 weeks in a year. And if I'm getting 1% every single week from Walgreens, that's over 52%. Compounded, it's over 70%. But I don't want to say 70% because it freaks some people out. 50% is hard enough. All right, so you guys have a great day, and I hope you enjoyed that. All right. Stop. We're going to do a quick trade on... Okay, draft. See if we can find another good one. And we'll do another good one if we can find another good one. All right, so apparently, AJ, John, so if I do this without using paper money and enter this at a real trade, this contract will expire on the 14th. Well, John, that's the trade I just showed you. Okay, what I always tell people, if you like it, great, fine, wonderful, I'm glad you liked it. Do your own research. Ask yourself the question, does it make sense? If I buy Walgreens first thing tomorrow morning, currently the price is at $9.89. That's the current price. Now, tomorrow morning when the market opens, I can't guarantee that's going to be the right price. Sorry, that's going to be the right price. Because as soon as the market opens, the market maker will put it in a new number. What is that going to be? Nobody knows. Now, the interesting thing about the opening price of the day, it's decided by one person and one person only. That's the market maker. The market maker wakes up in the morning and so he's kind of like the Lucky Charms guy. Oh, me Lucky Charms today, it's a wonderful day. I think I'll have the stock open up at this price. If he's having a bad day, it's like, bum, what a crappy day. I think I'm going to open it up at this price. I have no idea. Seriously, I really don't. What is going through the market maker's head when he decides to choose what the opening price is going to be? And don't kid yourself. There's only one price in the stock market that is decided by one person and one person only. That is the opening price of the day. So let me show you something quick. Let's get out of here. And let's go back to here. You see this right here, the charts? There's 4 numbers you're looking at on the chart. Anytime, any one of these candles, any one, 4 numbers. The opening price, whichever one it is, the high of the day, the low of the day, and the closing price. Opening price, closing price, high of the day, a low of the day. That's it. That's what all these are. Now, if the market maker decides the opening price of the day, it's you and I, okay? You and I who decides how high it goes or how low it goes by our buying and our selling. Because we buy and we sell in accordance to what we think, and the market maker, he decides what to open the stock for. All right, so that's Walgreens. We decided I like it, and I already have some, so there you go. Boston Sports Cards. Oh, I don't know. I'm new here. Okay, that's cool. All right, so AJ wants to take a look at Adobe, ADB. Now, I usually say no to Adobe because the numbers just don't work for me. But, you know, ADB, is that right? No, Adobe, ADB, right there. No options. Okay, do you see that? Adobe, no options. That's going to be no, unless I get the ticker symbol wrong. Or is it ABD? Oops. ABD. Nope, that ain't it. Well, so much for that. So we'll just take a look at US Steel. Sorry, dude, if you got to give me the ticker symbol. Okay, 'cause I don't trade Adobe. It just doesn't make sense to me. So you actually have to give me his ticker symbol that actually makes sense. What trades? What about basketball trade? Boston Sports Cards. Dude, terribly sorry, man. We're talking about dividend stocks and weekly cash flow. I'm looking for a safe, predictable, consistent 1% per week. That's over 50% per year. Investing, that's all we're talking about here. US Steel. Now, I do own some US Steel, so let's take a look at the numbers. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the movement. Down, sideways, down, up. Okay, fine, simple. Now we know there was a buyout offer for US Steel, but Biden said no, US Steel is going to stay a US company, not going to allow some foreigners to buy it. Okay, here we are, 37.80. Now I do own some US Steel, but I own it at 41. So yeah, I'm down $9 per share on my US Steel. But here's the thing. I still make over 1% every single week from my US Steel position. Let me show you how I do it. All right. So I own it at 41. It's currently at 37.80. And I made over 1% this week. So let me show you how I did that. Now, we're also going to show you whether or not it's a good time to jump into US Steel. So we're looking at 4 or 5 things. Okay, the high, the low, where was it, where is it, what's the direction? Okay, we see that. Next, we're going to take a look at the numbers. What do I mean by the numbers? What can I buy it for? Okay, I can buy it for, at this moment in time, $37.90. Now, we just talked about this a couple of seconds ago, that yes, these numbers are going to change first thing tomorrow morning. As you see, they're not moving. They're all the exact same, not moving at all. during market hours, 9:30 a.m. to 4 p.m. Eastern Standard Time every weekday, except for holidays. These numbers constantly change. Now, the math does not ever change. What am I buying it for? What strike price am I selling? What premium am I collecting? And is that 1% or not? Simple. Okay, so we're going to go over my trade. Hold on a second. John's got a question. This may be my first option trade I do using my margin. If wait a minute. If blows up, then I can tuition for the School of Hard Knocks. Jake, John, you know, if you got a problem, give me a buzz, send me a text. I'll walk you through it as best I possibly can. Or better yet, make sure you're here Thursday night. Oh, crap. Yeah, because Friday, market's going to close. And if you do an option trade for this week, okay, Friday is where you want to make your decision, whether you're going to roll it forward into the next week or are you going to let it expire, what you're going to do. That question usually gets answered on Friday afternoon. Okay? Now, let's take a look. So, 37.90 at this moment in time. The closest strike price, you should all know this right off the top of your head. The closest strike price to 37.90 is 38. I didn't have to look. I can tell. 37.90, the closest strike price. Here they are right here. 36, 36.50, 37, 37.50, 38, 38.50, 39, 40, so on, so forth, blah, blah, blah. 37.90, the closest strike price is going to be 38. Well, what's the 38 selling for? Well, the 38 is selling for $1.27. Do you have any idea what that means? For the new people, you probably don't. Let me explain it. If I'm buying it for $37.90, I sell somebody the right to buy it from me. Now, once I buy the stock, it's mine. I own it. I can do whatever I want with it. The simplest strategy there is to buy the stock. Unfortunately, there's no profit, there's no predictability, and there's no consistency in just owning a stock. You have to be able to buy it, sell something in order to get some type of cash flow. Unless you're one of those people that want to buy something, put it on a shelf, and just watch it. Kind of like plants. You just water it once in a while. Okay? You buy it and just leave it alone. No, that's not what we do here. If you're looking for capital appreciation, if you're looking to buy something and have it going up, 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 you're in the wrong place. This is not what I do. I'm here for cash flow only. If the company doesn't give me cash flow every single week, I want nothing to do with it. US Steel, love it. I've had it for about 2 or 3 months now, getting over 1% every single month. Brandon, Intel. How you doing, Brandon? Hold on a second. Hi from India. Namaste. Oh, was it Namaste? All right, anyway. So, 127 on the 38. Now, there's a couple things working here. Check this out. 37.90. If I sell the 38, okay, if the stock goes over 38, well, I back all the cash. I get that 10 cents difference between the 37.90 and 38. That's 10 cents. Not a huge, but this is what I'm looking at, 127. Okay, 127 times 3, that's about 3% trade. That's the fourth trade I showed you. 3 of them over 3%, 1 of them over 4%. Oh, hell yeah. All right, anyway, let's take a look. A year ago, 47.76. Tops off at the end, 48.22, and that was the beginning of March of last year. The bottom of the year, the beginning of September, 26.91. She shoots up, pulls back the last 90 days, looking for the same 5 things. You ready? The high, the low, where was it, where is it, what's the direction? Up, down, up, sideways. Okay, not that bad. Okay, I like it at this area. Don't mind it at all. So, what I want you to pay attention to, let's back it up for a second. Okay, move this over a little bit so you can see it better. Okay, do you see it better? You probably don't see what I'm seeing, but let me explain it to you. Hi from India. Are you trading in crypto, sir? No, I don't do cryptocurrency at all. Dividend stocks only. Okay, I invest in dividend stocks for weekly cash flow because I'm looking for a simple, safe, predictable, consistent 1% per week. That's over 50% per year, over 70% if you compound it. Now I'm using it for cash flow so that I can pay my bills because I decided to retire early. Take my little nest egg, invest it, get a weekly cash flow every week. That pays all my bills. I'm perfectly happy with that. All right, so you might not see it, but let me point it out to you. Okay, you get your high here, your low here. So you take out the high and you take out this low. Look at the channel just going sideways like that. Okay? Just staying between 35 and 42 and just going basically in that channel. Okay? Do you see it now that I'm pointing it out? Okay, so there's high, she comes down to the channel, stays in the channel, dips, comes back up to the channel, dips again, comes back up to the channel again. So it's right here. Do I mind buying it at 37? No. I don't mind buying it at 37. I actually own it at 41. Okay, so but let me show you how I'm getting my 1% every week, even though it's less than what I paid for it. I have no intention on selling it for less than I paid for it. So what I do is I sell somebody the rights to buy it from me. What price am I selling it for? Well, let's take a look. Wait a second, before I do that, last 90 days, here we are looking at the exact same thing. High, low, was, is. Look at down, up, sideways. Let's look at the last 30 days. The last 30 days right here. Okay, so here's your 30-day bottom. Here's your 30-day top right there. Basically, it's going sideways. You see that? Now, this 30-day bottom is going to disappear tomorrow. So this will be the new 30-day bottom here. And then next week, this is going to be the new 30-day bottom. And it's going to be all this. And that's like perfectly makes sense then. But she's in this channel here. So let's take a quick gander. I'll show you what I'm doing. Now, I already told you I bought it at 41. So let's take a look at here. Okay. Now, I bought it at 41, so I own it at 41. I can do whatever I want with it. However, I can open up this one. See, this week's 41 right here, it's going for 6 cents to 58. I might make my 1%, but most unlikely. Okay? Next week's 41 is right here. Okay? 40 to 58. So I could make my 1%, but that's not what I'm doing. I'm selling this one right here. Okay, so we're at 37 right now. I'm selling the 39.50s, which is going between 30 and 54 for this week. Next week, the 39.50 is going for 52 to 237. That's almost 2%. Now, what happens if the stock moves up? Well, if the stock moves up, I move my option price up next week. So as the days keep going by, I keep moving it forward. I keep buying back this week's and I sell next week's. So I continuously get a 1% every single week. Now, I have no intention on selling my stock until it hits my target. Well, my target's 41. We're at 37.90. It's a long way away from 41. It may be a couple of weeks before it gets to 41. But I'm going to continuously sell the premium against it. Okay, but I'm selling the 39.50s because it's 4 strikes away and I'm still getting over 1%. So that makes sense to me. Okay, pick a good stock, hold on to it, consistently sell an option against it, a weekly option, so you can get a consistent cash flow. All right, we got a question over here. Steven. Oh, Hedgehog. Hedgehog, Palantir? No. Palantir doesn't have consistency and profitability. Now, I'm getting a banner to go right up here to tell you specifically what I'm looking for. Dividend stocks that consistently increase in value, which means they consistently pay out higher and higher and higher dividends every single year. Palantir does not do that. Sorry. So when you see a stock with, say, it's paying over 3%, how many do you buy? One covered call or numerous ones? Okay, see, Stephen, you're new here because the terminology in which you're using is going to cause you to lose money. Now, the reason why I'm saying that, I'm not trying to insult you or anything, is that people don't know until they're aware of that they don't know. Okay? So, I'm not buying options, I am selling options. I buy the stock. Let's do this for a second, make it a little easier for you. Okay? I'm buying the stock. The stock right up here. Okay? Is the opening price, the high of the day, the low of the day, the close of the day, the bid, the ask, and the volume. Those are the 5 numbers that you're going to hear. Open, high, low, close, volume. Every single day. From the time it first goes public, okay, that's what an IPO is, initial public offering, an IPO. From that moment, an IPO, every single number is tracked. The date, the open, the high, the low, the close, and the volume. You can go to historical performance. Where is it? Okay, let's go all the way up here. Okay, here we go. This is what's called the data stream. Okay, the stock, MSTY. The current price, the date, February 4, February 3, January 31, January 30, January 29, January 20. Yeah. Okay, the open, the high, the low, the close, the adjusted close, and the volume. Every single one. And they also list the dividends. So when I'm saying I'm looking for a simple, safe, predictable, consistent 1% per week, I'm buying a good quality stock. My idea of a good quality stock is a company that is consistently profitable. Now, for the fun of it, we haven't done this in 2 weeks, so let's do it right now. We're going to go in and check exactly how many companies there actually are. For that, we go to FinViz. FINVIZ. Okay, FinViz stock screener. Yay! Everybody say yay! All right, here we go. So, here we go, right there. Get out of that. Before you see anything else, this number right over here, do you see it? 9,879. Every week, this number changes. At this moment in time, there's 9,875 different companies you can enjoy. Okay? Allegiant, Alcoa, Alternative Access, Goldman Sachs, Artrios, ATA, blah, 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 A to Z, 9,879. So what am I looking for specifically? Let's get rid of that. Let's get rid of that. And here we are. Okay. Specifically what I am looking for. 2 things and only 2 things. Consistency of profitability. 9,879 companies. I want to put my money with a company that is consistently profitable. Now, I'm looking for 2 decades of consistent profits. Well, you may think 2 decades is a long time. No, not really. The reason why it's not a long time, the stock market's been around for 420 years. Actually, 423 years. The first dividend stock was sold 1602. So 423 years the stock market has been around. The oldest stock that I believe in the United States would be Consolidated Edison, ticker symbol ED. Now, I don't trade it because it only has monthly options. So I'm looking for 2 criteria and 2 criteria only. Simplify it. That's it. Just 2. You ready? Do you have pencil and paper? This is a big one. 2. Consistency of profitability and weekly options. That's it. So out of that 9,875 different companies, there's only about 300 that actually fit what I'm looking for. So the other 98% of the stocks, I have no desire to look at them whatsoever. Intel is on my list. I do like that one. All right, Steve. So when you see a stock with, say, it's paying over 3%, how many do you buy? Covered calls. Okay, I don't buy covered calls, I sell. Okay, I buy the stock, I sell the option. Okay, 80% of all options expire worthless. I do not want to buy options. I want to sell. I want to be a minority. I want to be part of those that actually sell the option, not buying the option. I buy the stock, I sell the option. Okay, so up here, this is just information on just the stocks. Now, you do have to qualify, you do have to apply in order to be able to sell options. Now, to sell a covered call, it's one of the simplest, safest strategies. Okay? Simplest, safest trading strategy. You buy the stock, you sell somebody the rights to buy it from you for the exact same price. So if I buy it for $37.90, I sell somebody a covered call at $38, sell somebody the call at $38. I collect 72 cents for this week, $1.27 for next week. Pick which one you want. Okay, an option contract is a legal binding contract. You need 4 things. 4. Beginning date, ending date, consideration, and an agreement, a meeting of the minds. It means we both agree. I'm selling at 38, you're buying at 38. Okay, the beginning date is whenever you pay for it. If I buy the stock first thing in the morning and sell the option first thing in the morning, if you buy it first thing in the morning, you have from the moment you buy it until the moment it expires. So 7 February, that's this Friday. 14 February, that's next Friday. Now for all you gentlemen listening, and all you ladies listening, you just heard it. Next Friday is February 14th. Okay? And those you married guys, I'm going to say it again. Next Friday is February 14th. All right, so that being said, let's move on to the next one. Instagram is lagging. Yes, I know. Sorry about that, Sterling. You know, funny thing is, Sterling, okay, it says bad connection. Okay, it's an iPhone. The modem is 6 feet. Right over there. I could touch the phone and the modem at the exact same time. So how could it possibly have a bad connection? Boggles my mind. It does. Okay, so what do we have going over here on YouTube? What currency used to pay a dividend? That's a good question. 1602. Was it no, it wasn't the dinar. The gilding? Was it gild? Anyway, it was the Dutch East India Shipping Company, the VOC, Dutch East India Shipping Company. So Brandon wants to take a look at Intel. I love Intel. Just so happen to own some Intel, Mr. Brandon. INTC. Here we go. Okay, so let's go over here and let's take a look at the chart. Now, I have like a 5-step process here. It's pretty simple. Okay. You find a good set of stocks. Now I'm going to give you the list of stocks that I like. You ready? Get a pen, paper, crayon, chalk, mascara, lipstick, toothpaste. I don't care what you write with. Number 1, go to Google, go to Bing, whatever search engine you use online. Here's what you type in the search bar. Dividend Kings List 2025. That will give you a list of, I think it's 54, 55 companies that have consistently increased their dividends for 5 decades. That's 50 years. Okay? List number 2, Dividend Aristocrats List 2025. It's over 67 different companies that have increased their dividends for 25 consecutive years. Then you get the Dividend Champions, 25 years of consistent profits or consistent increase in dividends, but the rules are a little bit lenient, more lenient than the Aristocrats. Because the Aristocrats and the Champions, both 25 years, but a little bit more strict rules with the Aristocrats. The Dividend Contenders, 300 companies that have increased their dividends to their shareholders for 10 to 24 years. And then for the fun of it, we throw in Warren Buffett's list for 2025 also. Those 5 lists should give you those 5 lists should give you about 300 decent companies. If you find a company that's not on that list, that doesn't have dividends, fine, throw it in. Now, I do trade some, just a few companies that are not on that list. And that's only because it's probably on Warren Buffett's list, or it's on Kai Khan's list, or somebody else I respect as a trader on their list. So what else do we got here? We're looking at Intel. We're going to hold on a second. We're going to do that one. Sorry, my screen. What was that? Uh-oh. Oh, boy, Steven. So when you see that, blah, 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 blah. Okay, yep. So, Steve, to answer your question, Steve Kean, how many did I do? Well, it depends on the price. So if I put 50,000 in each position, it depends on what the stock price is. If it's $150, well, I'm buying, what, 300 or 400 shares? If it's $5, maybe I'm buying 5 or 10,000 shares. It all goes on the price. I like to keep my trades even. 20,000, 20,000, 20,000, 40,000, 40,000, 40. Keep them even. For me, that's me. You got to decide what's right for you, right? Okay, over here, holy cow, I got 99 questions. Oh, boy. Now, I like to get to every single question. What is the process to roll the option to next week? Ooh, that's a good question. I'm going to address that in a second. Let's take a look at, let's finish up with Intel first. Okay, Intel, the high, the low, where was it? Where is it? Look at this movement. Up, down, sideways, up, down, up, down. Okay, so here we are right here, 1929. Ask yourself a question. Do you like Intel? Do you like Intel at this? This shows you that it's been dropping for the whole year. But now it's kind of like going sideways into a new trading range. Is it good? Is it bad? Is it indifferent? What is it? Don't know. Depends. Do you like the company? Do you like the company at the current price? Well, let's take a look at it from a different perspective. Okay, so the high was 46.75. That was back in the beginning of March. The bottom was in September, and that was 18.45. Look at your last 30 days. Now, the last 30 days gives me a good idea where it's going. Okay? Check this out. 30 days ago, we're at 20.50. We bottomed out at 18.30, shoot up to 22.50, drop back down here to 18.30 again, and today was higher than yesterday. Now, I normally like 2 days to the upside when I find a bottom. Here's the bottom right here. Today's 1 day to the upside. Tomorrow might be a perfect time to jump in, depending on a few things. Number one, do you like the company? This is going to be different for everybody because we're all different here. We all have different objectives. We all have different goals. We all have a different amount of risk that we're willing to take. So ask yourself the question, do you like Intel? Do you like Intel at this current price? Well, I do. I actually own some. Okay? So right now, the bottom was yesterday. Today is a little bit higher. If tomorrow is higher, that's a perfect opportunity, in my opinion. You guys have to figure out what's right for you. I think it's a good opportunity. So let's see what the numbers look like. If it's at 19.29, well, this week, the closest strike price to the 19.29 is going to be the 19.50. And it's going for 29 cents a share. That's over 1%. Okay, but here's the thing. There's only 3 days left. So if we go to next week, the next week's 19.50 is going for 55 cents. That's 2.5%. So I just showed you 5 trades, 3 of them at 3%. 1 is at 4%. This one here is at 2.5, 2.5. Okay. Now, I only like stocks that I know who they are and that I have been following. Certain stocks I don't even bother with. If it doesn't have 2 decades of consistent profitability, I don't want to look at it. Now, I showed you a couple seconds ago. There's 9,875 different companies. Well, that's a lot to choose from. You don't have to choose the ones that I do. I mean, these are the ones just work for me. I mean, I've only been doing this for 15, 20 years. What the hell do I know? I always tell people, don't listen to a damn word I say. Do your own research. Does it make sense? Okay, do you know who Intel is? Do you know what they do? Do you know if it's a good trade for you? Because we're all different. What do we have at? Fitzair. What's happening, Fitzair? Okay. So Intel, it looks good to me. I actually own some. I'm not going to get any more because I like to, not buy too much of one thing. I made that mistake a long time ago, and I won't do that again. All right, let's take a look at some more of these questions. Oh, how do we roll forward? All right, let's do this. Rolling forward depends on what trading platform you're using. Now, this here's a trading platform called Think or Swim. It is owned by Charles Schwab, one of the big trading houses. Okay, so there's Fidelity, there has Just to Trade, there's international brokers, there's Robinhood, Acorn, Webull, there's a whole bunch. Okay, you can use whichever one you want. I don't know how they do it. I know how Robinhood works, and I know how Thinkorswim works, because I use both of those. Now, 15 years ago, I wrote a book, Choosing the Right Trading Platform for You. Well, a lot has changed since then. When I first started trading, a commission was $250. So it was $250 to get in, $250 to get back out. So you better be damn sure you were right. All right. I was excited when they went from 250 down to 125. They went from 125 down to like 69. Then from 69, they went to 49, then to 39, then to 29. Then it finally came down to 10, 12. Then all of a sudden, now you get free trades. Like, would have been nice if they had that 20 years ago, but no. All right, anyway, Intel, I like Intel. Let's keep on keeping on. What are we looking at next? Oh, how to roll. How to roll. How to roll. Let's do this right here. Okay, so if we're going to roll, let's get out of that. Let's go to here. And here we go. Basically, on Think or Swim, I'm going to right-click on any one of my positions. Right-click. This drop-down window opens up. And I want to hit Create Rolling Order. So it creates it for me. All right, and here it is right here. Okay, this is the order. It currently says buy back February 14, which is next week. Sell February 21. Well, that's another week out. Now, I can push it out further by just clicking whichever button I want. If I can change this to 28 February. Well, now I'm getting 60 cents. But I don't want to do that. I want to do February 21 and pick up 52 cents. Well, if I'm picking up 52 cents, an additional 52 cents, that's more than 1%. Works for me. And then all you do is you hit confirm and send. Okay, and here's the trade right here. I'm buying back 14 February, and then I'm selling 21 February. That pushes it out another week. That's basically all there is to it. Now with Robinhood, you pull up the trade that you're looking at, and you hit trade, and it says trade options, and it says roll forward. And then all you do is you just pick the new date that you want to roll it forward to. But that's how you do it here. Delete. All right, so that's that one. All right, what else we want to take a look at? All right, John. So you're linear making a linear straight line, a little bit of statistical or RMS analysis, I believe, if you're assuming it's a straight line in the form of y equals mxb. Whoa, John, I'm going to simplify it for you, John. You ready? The trading strategy I'm showing you was created for a 9-year-old. Now, it's been a while since I showed it, so let's bring it up so you guys understand where it came from. Uh-oh. Right there. Right there. Nope, right there. Damn it. Home. So I gotta go and find the actual video. View all. There we go. And we're going to go over to YouTube and check a video, and we're actually going to see the little princess and show you how long I've actually been doing this. Give you an idea of, where is it? Come on. Here we go. Videos. Here we go. And the oldest videos. Look at that. Way back when.
which my dad didn't let me call me that, but I do. Being part of that, you're going to be getting, hi, I'm JC, and me as you being part of my internet website called Tinny, which my dad didn't let me call me that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of.
That's me. Long time ago. This is my favorite part's coming up. It's funny as hell. Hold on a second.
Every single day you buy different stocks. Every single day there's a different company paying out dividends. Seriously.
I always laugh when I see that.
Just one. January, February, March, that's 20.
Let's get out of that. All right, we don't need to see that. So basically what that is, my 9-year-old daughter, in 2008, she says, Daddy, can you teach me what you're doing? So trying to teach a 9-year-old how to trade stocks, it has to be simple, safe, predictable, consistent, and no way for her to lose. So I came up with 5 rules. That's why you see me doing a lot of 5s. Okay, rule number 1, never buy something you don't understand, which means you should know everything you need to know about a company in order to make your decision. So when people put up a stock and ask me to take a look at it, I think to myself, don't you understand rule number 1? Never buy something you don't understand. Don't ask me to confirm what you should have already confirmed. Does it have dividends? Is it profitable? Okay, those are the ones I'm looking for. Rule number 1, never buy something you don't understand. Rule number 2, never sell at a loss. It defeats the purpose of the whole game. And yes, it is a game. Don't kid yourself thinking that it's not. Rule number 3, consistency of profitability. Are they consistently profitable? That's a tough one because you actually have to, either you have 2 choices. Take a look at all the quarterly reports, all the annual reports for the last 20 years, or what I prefer to do, go straight to the dividends and how the dividend process has increased. Reason I say that is a dividend is a portion of the company's profits they give back to the investors, and that's you and I. Once we buy a stock, we become an investor. We own a part of the company. We are entitled to a portion of the profits. It's actually that simple, okay? We buy the company's shares. We are entitled to a share of the profits. Okay. Now, if they're consistently profitable every single year, you'll see the dividend going higher and higher and higher and higher and higher and higher. That's why I don't like some of these companies where the dividend goes up and then it goes down, then it goes up, but then it goes down, up, down, up. I don't like that 2 steps forward, 1 step back stuff. Okay. I don't like that. Are they consistently profitable or are they not? You guys can do whatever you want with your own money. For me personally, I like a company that's consistently profitable. Right. So that being said, rule number 4, weekly options only. The only way I'm going to get a consistent weekly cash flow is through a weekly option or sitting in front of my computer every day. Okay. I don't want to do that. I don't want to sit in front of the computer. Okay. And number 5, make sure the numbers work. What do I mean by the numbers? What am I buying it for? What strike price am I selling? What's the premium I'm collecting? Is that 1% or more? Is the chart telling me it's the right time to buy? That's basically all I'm looking for. Okay? All right. Hopefully that's not too much. What is the process to roll? We already did that. Let's keep on going. Some more questions. Okay, Jonathan, we already looked at U.S. Steel. What's your thought on Altria? Ooh, Jay Moore, I like Altria. Let's take a gander at that one. Altria, give me a second. That is a dividend king. They have increased their dividend payments for more than 5 decades. What do we have over here on YouTube? Okay, Brandon, we already looked at Intel. Sorry, my screen froze. James Kirby in 1602, a currency they were using, whatever currency the Dutch were using back then. I'm going to call you tomorrow. Please link what time you're free. Brandon, I'm retired, dude. I'm free almost all the time. Okay? Except for, hold on, 9 a.m. I do a live trading group call. Now, it is a paid trading group. I'm not trying to sell anyone anything, okay? But we jump in at 9 a.m. every day just before the market opens to go over all our trades. Okay, there's about 100 people that are part members, but only about 20. It's strange. Only about 30 people show up. Got 100 members, but only about 30 of them show up. Okay, fine. But we go over everybody's trades to make sure everybody's consistently profitable. So if you're serious, you might want to think about that. Okay, I actually walk everybody through each individual trade just to make sure everyone's profitable. All right, world you want to live in, girl. How are you? Can you please take a look at Ford? I bought some Ford, and I actually own some General Motors. Hope this doesn't duplicate from before you ended. Okay, world you want to live in, girl. Sit tight. We'll take a look at that in a minute. Let me go through some of the questions over here on YouTube. It's funny, Instagram doesn't have hardly any questions. They don't ask questions over there. I have your number already. All right, Brandon. John Kirby, toothpaste. I have no idea what that means. Hello, sir. How are you? Mascara, lipstick. Okay, yep, I get all that. Great answer. You're welcome. Glad you like that answer, Steve. Intel is looking for a new CEO. You want the job? Oh, hell no. You can't pay me enough. Isn't that weird? Well, you probably could, but I'd only do it for about a year or so. All right, Brandon, Siri, Kohl's. All right, we'll take a look at Series and Kohl's. Hold on a sec. Hold on a bit. Right now, we're going to look at Ford. All right, Ford. Oh, wait a minute. We're on Altria. Let's finish up with Altria. Now, Altria, MO, is a dividend king. Means they have increased their dividend payments to their shareholders for more than 5 decades. Now, that works for me. You know, a company that's consistently profitable means they increase every single year. So the question is, why don't you have this on your list? That's a better question. Okay, look at 5 things. High, low, where was it? Where is it? What's the direction? Up, down, up, down, up, down, up. Okay, makes sense. Now, what's the current price? The current price is $52.75. What's the closest strike price? 53. Well, this week's 53 is going for 18. That's a no. Now, we want to look at next week because there's only 3 days left in this week. So next week's 53 is going 46 to 55. So yeah, you might get your 1% there. Okay, so let's take a look at the numbers. Does it make sense? A year ago, we opened up at 41. Bottomed out the end of February at 39.29. Okay, that's the bottom of the year. The last 90 days, here's the high, here's the low, here's where it was, here's where it is. She shot up, pulled back, shot up again. All right, great. What's the last 30 days? So the last 30 days is going to give me a good idea of what's coming next. 30 days ago, we're at 53. We dropped down to 50, shoot up to 53.75, drop back down to 50. Now look, here's your 30-day bottom. 30-day high last Monday, 30-day bottom last Thursday. Had a big gap down too. So Friday was higher, Monday was higher, today's higher. Those are 3 days to the upside, if you like Altria. Okay? Let's take a look at the seasonality. What can we expect from Altria for the next couple of weeks? Now, seasonality is not a guarantee. Okay? There's only 3 guarantees in life: death, taxes, and disappointment. 3. All right, so here's Altria right now. The blue line represents the movement this year. This is all for the month of January right there. The red line, that's 10 years worth of average movement over the last 10 years. What does it normally do this time of year? Basically, it looks like it's just going sideways. No big moves. Okay, right here, on that blue dot, click left, drag right. That's 1 whole month. Okay, we're right here. It looks like she's going to dip a little bit, go sideways for the whole month of February. Basically, just go sideways. Towards the end of the month, it looks like she's going to dip. So that looks okay for me. Now, seasonality, although it's 10 years of average movement, it doesn't guarantee what it's going to do. This gives you an idea of what it has done. Now, with it being over 100 years old, okay, Altria, gives you a good idea if they're doing the exact same things over and over and over again. So just because it did 10 years in a row, there's no guarantee that it's going to do it again. But it's a good measuring stick or a good comparison. If it goes up at the beginning of the year, well, shouldn't it go beginning of every year? Should. It's not guaranteed though. Okay, so that's Altria. The numbers work for Altria. I actually own some Altria. Not that that's it's not that it's a recommendation or a tip. I don't do that. I don't give recommendations. I don't give tips. I just give my opinion. I read the charts. Anybody can read the charts. I can get my 4-year-old grandson. Hey, little buddy, where's the high? Oh, Papa, it's right there. Hey, little buddy, where's the low? Oh, Papa, it's right there. Okay? It's not that difficult. A 3-year-old, 4-year-old can figure out, here's the high, here's the low. Here's where it was, here's where it is. Look at the movement. Down, up, down, up. It's not difficult. Adults, you guys, have a tendency to make it more complicated than it needs to be. It doesn't need to be complicated. It's relatively easy. All right, so let's keep on going. Next, what do we have next? Oh, Siri. It's funny, I actually have some Siri. Isn't that weird? You guys keep coming up with, well, not really, because you guys come up with some weird stuff. It's like, oh, hell no. Oh, hell, okay. Here we go, you ready? High, low, where was it? Where is it? What's the movement? Down, up, down, up, down, up. Simple. Now, 24.77. The closest one's going to be the 25. It's going for 23 to 26 for this week, the last 3 days. Next week, 25 is going for 32 to 48. That's 1.5 to 2%. Not as good as the first ones we saw. But the question is, do you like Siri? Well, let's zoom in a little bit and take a look. Okay, a year ago, Siri's at 51.73. The last 90 days. Well, the last 90 days, we have a high here. Bottom of the year is right there. That's where it was. This is where it is. Look at this. Up, down, up. Okay, that looked pretty good. Now, the last 30 days, which means the last 30 days, well, last week and the week before, gives us an idea. Okay, think of it this way. If we could take this and put it on its side, think of it as a river as it flows. Okay? This way, that way, that way. It just snakes along. Okay? Where is it going next? Don't know. What's around the riverbed? Don't know. Is it continuing going up, or is it going to turn and go back down? Don't know. That's what tomorrow's all about. There's always tomorrow. Okay, here we go. Last 30 days. Simple, simple, simple. High, low. Where was it? Where is it? Up, down, up, down, up. Way out of range, in my humble opinion. Not a good place to jump in. It's a great place to jump out, depending on where you are. Now, I have Siri, and my Siri should expire this week because it doesn't make sense for me to roll it forward. Okay? Okay, you always look at the numbers. Do the numbers make sense? What am I buying it for? What strike price am I selling doing a covered call? Remember, simple, safe, predictable, consistent. Is it 1% or more? It either is or it isn't. Okay, you can only have one 30-day high and one 30-day low. What usually happens at a 30-day high? Profit taking. Because if you're going from the bottom, $20.50, the high is $24.62. So from here to here is $4.10. $4.10 on a $20 stock. That's over 25% increase. So if you get a 25% increase in 1, 2, 3, 4 weeks, yeah, if you don't take it, it's your own damn fault. Okay? What's going to happen next? Almost guarantee this thing's going to drop. Because you got people like me, some people you in the audience, you see a 25% increase. Yep, taking my profits. I'm out of here. Thank you. I'll see you when you come back down again. Because if you think you're going to buy a stock and it's going to do nothing but go up, you're kidding yourself. Stocks do two things. They go up and they go down. They do not come to the house and take the dog out for a walk. They do not wash the dishes. They do not make the bed with those nice little hospital corners. Put the candies on your pillows. They don't do that. They go up, they go down. That's all they do. Okay, 25% increase from the middle of January to where we are today. If you think there's not going to be profit taking, you're kidding yourself. Okay, it would be foolish to not take profits here's two things I've learned over the years. Number one, it ain't a profit until you take it. Just because it looks good on paper doesn't mean you can actually spend it. Number two, nobody ever went broke taking profits. Nobody ever went broke taking profits. It's not a profit until you take it. All right, so let's continue. So I like Siri. I do have some Siri. What do we expect Siri to do? Well, Siri, hypothetically speaking, oh, hell no. If you can't read that, look at this. That does not look good at all. So let's zoom in a little bit closer. Okay, the next couple of weeks, here we are right here, February 4th. The next couple of weeks, what do you think? Oh, hell no. Can I say that again? Oh, hell no. Anyway, next, that was Siri. So that damn stock got me last week. Sorry about that, Brandon. Okay, Kohl's. Ooh, I got some Kohl's too. Isn't that weird? Almost everything you guys are saying, I have. All right, Kohl's. KSS. KSS, Kohl's. Okay, well, now that don't look good at all, but it depends on your perspective. Now, old style investing, it looks great. Why? Because the best time to buy a stock is at the low. And you can't get any lower than the low of the year. Now, the low of the year was a couple of weeks ago. We're just floating around the bottom at the moment. But the low of the year, look at the high. The high is almost at 29. And then the low is at 13. That's a 50% drop, or over a 50% drop. Great time to buy. But what happened if you bought last year? Now, when I say in context, now, the old style investing, when you buy something and you hold on to it for decades, hey, that's great. It works for some people. It's not what I'm looking for. Okay, when it came time for me to think about my life, I've been working since 1973. My first job was Old Man Simmons Farm, loading firewood, picking tomatoes, green beans, squash, corn, farm stuff. Shoveling shit, literally. Literally. I kid you not. All right, anyway, so I've been working since 1973. It's 2025. I retired in November of 2023. That's 50 years of working. I'm okay with that. Most people work 30 to 40 years of your life. I worked 50. Give me a break. That being said, what I mean by context, old days, people would buy something, hold on to it for decades. Okay, when I saw what I had available in my little, let's call it egg basket, my little nest egg, I took a look at that. If I was going to bring it to a money manager or a fund manager, they'd look at me and laugh and say, yeah, buddy, you got a couple more decades to work in order for you to retire with a decent amount of money. Okay, that was kind of disheartening. It wasn't until my 9-year-old daughter jumped on my lap and said, Daddy, can you teach me what you're doing? So I taught her a simple strategy. Simple, safe, predictable, consistent. Great. She's making 5% per month. And here I am going up, down, up, down. Okay. To be honest with you, I've made as much money in 1 week as most people make in a year. Great, wonderful. I lost money, the same amount of money in 1 week that most people make in a year. I lost. So here she is making 5% every single month. I say, all right, wait a second. It keeps on working for her, so I'm going to do it. So ever since I showed it to her, it's like this is basically the major of what I do. Like 90% of what I do is this. Okay, dividend investing for weekly cash flow. Now, every once in a while, I'll do something a little bit more risky, but I try to stay away from it because that little green monster on my shoulder saying, buy me, buy me, buy me, buy me, buy me. Yeah, no. You got to get that under control. Seriously, you do. So I'm getting 1% a week. So my little nest egg is allowing me at 1% a week to live comfortably in retirement. If I was going to give it to a money manager or a fund manager, I'd still have to work. So this works for me, and this is why I do it. All right, you guys just will happen to be in the right place at the right time, because basically I'm just sharing what I'm doing. And the only reason why you're seeing it now, because somebody was stupid enough to put a camera in front of me and say, James, how about it? And then some people say, hey, this is great stuff. Show us more. So that's why we're here. This is just a hobby of mine. This is not a business. Okay? I do this 10 to 15 minutes every morning. So why not show other people how to do it? Because I got pissed off and aggravated when they told me, no, you can't do that. No, you have to do. I hate it. I'm Generation X. We hate being told what to do. Okay? If there's a way to figure it out, a Gen Xer will figure it out. Okay? So, that being said, I like Kohl's because, like I said, it's all in perspective. Years ago, you'd think on annual returns, hey, let's buy Kohl's. Well, what's giving me? Well, it's giving me 3% a year. No, that doesn't work for me. I want 3% a month, 4% a month, 5% a month. I don't want annual income. So what you're doing here is you have to change your thinking. I'm buying it 5 days at a time, jumping in on Monday, hopefully being out on Friday. Does it work all the time? No. I once had to hold a stock. Can you believe I had to hold on to it for 9 months? That's it. Longest I've ever held anything was 9 months. But here's the thing. I held it for 9 months, but I still made money. So I bought it here. It dropped, floated her on the bottom before she came back up, leveled off, and I sold it for a profit. 9 months I owned it. I collected 3 dividends and over 30 premiums. Every single week I brought in something. So if the stock's here at 13.22 and I bought it at 18, well, I'm not trying to sell the 18 because the 18 is basically worthless. Okay, if I bought it at 18, it's currently at 13.22. I'm selling the 14.50s or the 15s because the 14.50s are going from 7 to 11. Okay, not quite 1%, but it's like 3/4. Okay, 0.75% is like 40% per year. Well, I'm okay with 40% per year, even if I picked up 0.5%. Okay, even if I picked up 0.5%, like right here. Okay, 0.5% every single week is 26% per year. When's the last time you guys got 26% per year? Missing my target. My target's 1%. If I miss my target and only get 0.5%, oh, boo-hoo for me. But I'm still making 26% a year. All right. Let's take a look at numbers. Remember I said it's all in perspective? Let's get some. Let's get some! Last year, we were at 25.48. Now, we topped off at the end of March at 29.71. The last 90 days, last 3 months, here's your high, here's your low, here's where it was, here's where, look at the movement. Down and then sideways. Okay, now we bottomed out last 30 days. Here we go. Last 30 days. 14.10 shoots up to 14.60, drops down, shoots back up, drops down again. Monday, yesterday, is your 30-day bottom. What does that tell you? If you've been paying attention, it should tell you that if tomorrow she's higher, that's a great time to jump in. Because look where your high is, 14.60. Look at where it is right now, 13.22. Couple of questions you're going to ask yourself. Question number 1, does it make sense? It either does or it doesn't. Okay? You get 2 choices. It makes sense, jump in, do it. If it doesn't make sense, your 2 choices. Try to figure it out, ask more questions, or say, it's not for me. It's not for everyone. I'll tell you, it's pretty boring. I do the exact same stocks over and over and over again. Do you remember that video I showed you a few minutes ago with JC Lynn? Hold on. I'll show you. You may find this interesting. You may not. See this right here? 860 videos. 860 videos I've done. Okay, go to the oldest ones. Old videos. The oldest right here. Okay, there's the princess right there being silly. Okay, here she is explaining dividends right here. That's like 12 or 13 years ago. Okay, we first stepped in front of a camera when she was 11.
3 minutes, I'm going to teach you how to make more than the average trader. There are 5 keys. Hi, I'm JC, and I'm the 10-minute trader. In less than 3 minutes, I'm going to teach you how to make more than the average trader. There are 5 keys. Key number 1, there are 156 companies paying over 10% yield this year.
Okay, so we first stepped in front of a camera when she was 11. That's 3 years after she's been trading. So she's been trading for a while in this video. Now, we didn't have what we have nowadays. This is a big, huge whiteboard. And I had to manually write everything out. How do you keep a 9-year-old, 10-year-old, 11-year-old interested in trading stocks? Well, it wasn't easy. I had to make it fun. I had to make it exciting. So yeah, sometimes it was like pulling teeth, but for the most part, she did rather well. Let's get out of there. Let's get back out of here. All right, so number 1, does it make sense? Number 2, do I like this stock? Number 3, do I like this stock at this price? Number 4, am I willing to hold on to this stock and trade every single week, bringing in cash flow and hold it until it hits my target? Well, if I'm buying it tomorrow morning at $13.22, well, my target is going to be $13.50. And the $13.50 is going for 29 cents. Well, that's 3%. That's the 4th trade I showed you tonight that's paying 3%. So you got 1 at 2.5, 4 at 3, and 1 at 4%. Just tonight alone. I do this every single night. I look at dozens and dozens of stock every single night, but it's always the exact same thing. Where's the high? Where's the low? What is the movement? What am I buying it for? What am I selling for? Does it make sense? Are they continuously profitable? It's a yes or no question. Do they have weekly options? If they have no weekly options, it doesn't make sense to me. Because if it doesn't have weekly options, I got to sit in front of the computer and wait for it to move. Yeah, no thank you. All right, I'm 61, I'm retired, I don't want to sit in front of the computer. All right. Can we look at Riley? Linderella, how are you today? Linderella, get the dress for Linderella. Okay, Riley, R-I-L-Y. Funny thing, I actually have Riley. You guys keep coming up with these stocks I own. It's weird. Okay. Hi, hello, where was it? Where is it? What's the movement? Up, down, sideways. Well, that's an easy one. Up, down, sideways. It's easy to see. What's the number? $4.97. Seriously, you guys in the audience, please tell me you have $4.95 to buy a halfway decent stock. I'm saying halfway decent because you don't know anything about it. Well, maybe you do, maybe you don't. So Riley, $4.97, which means the closest strike price is going to be the 5. So this week it's going from 2 cents to 20 cents. Next week it's going from 10 cents to 30 cents. Decide which one you like. Okay. Now I've already have next week's, right? But take a look at the numbers. Okay. A year ago we're at 18, shoots up to 40. 40. Now she's down at 5. How would you feel if you bought it at 40? Now it's down to 5. Well, I'm a big firm believer in watching what you're doing. Does it make sense? Would I have bought it back here? Look at this. This 30 days. Would I have bought it here? Oh, hell no. Now, I would have bought it here. See, here's your high. Let's back up for a second. Whoop, wrong way. Okay, so see where we are here? Down, up, down. At this point here, I'd be looking at this, waiting to find the bottom. So let's see what happens. Move one day at a time. Okay? It's 1 day higher. See, here's the bottom. 1 day to the upside. 2 days to the upside. Now, that's 2 days to the upside. What I'm looking at next, if it's higher than the close here, what is that close? Okay, here's all your numbers up here. See them? Okay, there's the date, 4/22. The open, 2008. The high, 22.55. The low, 19.75. The close, 21.54. Okay, those are your numbers for the stock right here. This day right here. Here's your bottom right there. 1 day up, 2 days up the next day. If she opens higher than 21.54, that's where I would jump in. There's no room in my world for wishy-washy. Okay, find a bottom, 2 days up, Great. Now, the third day, is it higher than the previous close? Great, that's where I'm jumping in. Next day, okay, she opened up down. So no, I wouldn't have jumped in. But I'd jump in the next day because now we have 3 days to the upside. So I would probably jump in the next day. Okay? Anyway, let's go on to the next one. So Riley, way back over here, last 30 days. All right, here we are, last 30 days, right there. Okay, so 30 days ago, we're here. Here's your 30-day bottom, 30-day top. She's coming down. Yesterday was a low, today's higher. So I'm looking for another day to the upside, which could be tomorrow. Okay. And what does seasonality tell us for Riley? Seasonality. What does this thing normally do? Normally do. Normally do. What does this thing normally do? Okay, here we are right here. Here's the next month right there. Or there. Okay, so for the next month, we're just basically going sideways. Is it guaranteed? No, nothing's guaranteed. But it looks good. Does the numbers look good? Do they or don't they? Am I making my 1%? Am I not making my 1%? Jonathan, I bought X on Monday. On your advice, Sunday. Thank you. Okay, Jonathan, first and foremost, I don't give advice. I show you the numbers. If you like the numbers, then you buy it. Okay, I always tell people over and over and over again. And the nice thing about having this stuff recorded, I say it every single night. I don't give advice. I read numbers. I point out things. You are responsible to make your own choices. However, I'm glad it worked out for you. Really, I am. Okay. Jay Moore. Thank you for sharing, Jay Moore. Intel, we already looked at. Ooh, Scott, we looked at certified freight yesterday. Consolidated freight yesterday, CF. Let's get out of there. Let's get out of here. Back to where we were. There we go. Okay, so CF we looked at yesterday. We have over here on YouTube. Brandon, you picked up a good one. I lost Kohl's. All right. PayPal, no. PayPal doesn't have dividends. Sorry about that. AJ, you want to take a look at Nike? Nike, I like Nike. NKE for Nike. Yeah. All right, interesting. Let's go back a little bit. Okay. First and foremost, let's take a look at Nike. Here's the high, here's the low, here's where it was, here's where it is. Look at this. Gap down, gap down, gap down. Okay. Down, sideways, big down, up, down, up, down, up. Okay. Interesting. Let's take a gander. The numbers for Nike, 77.15. The 77 is going for 94 for this week to 107. Next week's 148 to 155. It might be better to do this week's, get your 1%, and if it's available again next week, pick up another 1%. If you like Nike, of course. Well, let's take a look at the chart. What's the chart telling us? Well, a year ago, we're sitting at 99.47. Okay, the high of the year, February 14th, 107.43. Well, your bottom, what was it in the last 90 days? Same thing. High, low, where was it? Where is it? Look at the movement. Down, up, down, up. Well, here's where we are right now. The last 30 days. Does it make sense? Okay, here's your last 30 days. Let's move this over just a smidge, see if it makes more sense. Here at 73, we drop down to 70, shoot up to 79, back down, back up. I don't like where it is, me personally. Okay, here's the high here. She pulled back once. Then today was another down day, going to the downside. Okay, no. What does Nike normally do this time of year? Normally, is it guaranteed? No, nothing's guaranteed. But look what happens. Okay, here's where we are right now. Okay, so basically, could go sideways. Could. This is what it did over the last 10 years, this time frame. Sideways until the middle of February, and then drops right into the end of March. Usually. Okay, they've been making sneakers for decades. Do they do the same thing over and over again? Well, usually. There's nothing surprising, nothing new. Okay, AJ, PayPal is going to be a no, they don't have any dividends. Sorry. David, good night. Good night to you. John, then when you become the CEO of Intel, you could do a shitload of... Okay, insider trading, yep. What are the dividend list? Tim McCarty, how are you? Dude, have we ever got that mess squared out yet? I mean, it's kind of silly. All right, the list, you ready? Number 1, dividend kings. Number 2, dividend aristocrats. Number 3, dividend champions. Number 4, dividend contenders. Number 5, Warren Buffett's list, or Berkshire Hathaway's holdings, whichever way you want to label it. Okay, Buffett is in trouble. Yep, legally. Buffett owns Siri. Yep. F.K. Buffett. Nobody likes him. Okay. Buffett is selling since his partner Charles passed away. He has the brains behind Buffett. Okay, can you explain the Capricaz constant? I have no idea what the hell that means. You're not a baby boomer. No, I'm not. I'm a Gen Xer. How did you collect all those premiums without your shares being called? Okay, Tim, it's not that difficult. It's all in the numbers, Tim. What I paid for it, what I sold the strike price for, what is the current stock price, what is the value, what is it worth to the person buying or selling. All the numbers, they're really not that difficult to understand. Ticker symbol. Okay, Brandon, we already looked at ExxonMobil today. Now, what do we have over here? Consolidated freight. Let's take a quick gander at consolidated freight. CF Industries. Interesting. Interesting. All right. Let's take a gander. Are we ready? Consolidated freight, CF. The high, the low, where was it? Where is it? Look at the movement. Up, down, up, down, up. Okay, we're at 94.09. The closest strike price is going to be the 94. And the 94 is going for $1 to $125 this week. Next week, it's going for $165 to $190. Okay, probably best to do this week. This week's 94. What does it look like? A year ago, we're at 75.88. Oh my God, you haven't figured that one out yet, Tim? Gail Stencil. Since there are companies that are strong, what is a bad scenario for you? Do you ever have a loss, and how does that occur? Gail, to be 100% honest with you, I had 3 losses last year. 3. 52 trading days. I'm sorry, 52 trading weeks. 52 trading weeks. Each week was somewhere between 5 and 7 companies. 5 and 7 in 6 different accounts. So 5 and 7 in 6 different accounts. I had 3 losses in mine. One account had 0 losses all year. Okay, another account had 2 losses, and another account had 4, I think. This year, I got 7 accounts, 0 losses so far. Okay, how does it work? Well, you see me here giving you free advice. I don't ask anyone to pay for anything. Now, what I do ask for is if you are serious and you really want to trade, $100 a month is not a lot of money if you're serious about trading. So the morning trading group's only $100. I'm not trying to sell anyone anything. But there I show a lot more information. Here you're getting the basics. The basics, you don't need me after this. Buy a good quality stock. Make sure the numbers work. Do it at the right time. Is the chart telling you yes or no? Do the numbers work? Is the company consistently profitable? These are questions you need to ask yourself. Okay, all the details like you're asking, I reserve. I got to draw the line somewhere. You know, I can't give away everything I know for free. So I give away this trading strategy, just one. I call it dividend capturing 2.0. You buy a dividend stock just before the EX date. You sell a covered call against it. You get 1% every week, simply, safely, predictably, consistently. That's over 50% per year. Great. If that's what I'm giving away for free, what are the people who are paying for the information? What are they getting? So just, you know, food for thought. CF. Let's continue. A year ago at 75.88. We bottomed out in July at 69.19. The last 90 days, same thing. High, low, where was it? Where is it? Look at the movement. Up, down, up, down, up. It is actually that simple. Adults have a tendency to make it more complicated. Let's take a look at the 30 days. Because the 30 days gives me a good idea of where it's going next. Because if you think about it, okay, up, down, up. Well, here's your 30-day bottom right here at 86. Your 30-day top's here at 98. So from 86 to 98 is a $12 move. So $12 from here to here. You bet your ass there's going to be profit taking. Profit taking down to here. What happens? Gets to a bottom, 2 days to the upside. I jump on day 3 and it goes back up again. Ooh, they have a song. What goes up must come down. Spinning wheels got to go around. Okay, let's take a look at the seasonality. What does it normally do? Here's where we are right now. It basically, look at this jump up right here. You can't miss it. Okay, you take a look at the chart. You can't miss that right there. The first couple of weeks, it goes down. So the next couple of weeks, here's where we are, right here. Here's where we are, right here. It's going to go up very slightly for the next month. Okay, I like CF. It's a nice company. Okay, consistently profitable. It is on my list. I don't own any at the moment, but let's take a look what the numbers look like. Okay, she is in an upward trend. But here's an interesting question for you to ask yourself. Bottom is here. 88. We're currently at 8.94. That's a $6 increase. $6 on an $88 stock is somewhere right around 6 or 7%. I'll probably say around 7%. It's only 7% from here to here. How much higher is it going to go before the profit taking takes place? Can you jump into here, get your 1%, get out before the profit taking takes place? Or do you like it enough to hold on to it and just keep holding and keep rolling it forward and keep collecting premiums every week? It's an interesting question. Okay, SDC, all right, East County Family, Riley. We already looked at Riley. Okay, we already looked at Riley, sorry. So back over here to TikTok. Holy shit, it's 11:30. All right. No more stocks. Let's finish up answering questions. I got a bunch of questions to do. Sorry about that. I got sidetracked with the time. Okay. Felix, Intel should go up once they find a new CEO. We don't know. Scott, there's a cost to roll. Is it better to let it expire than resell on Monday? Scott, it's always going to be about the numbers. What you buy the stock for? What did you sell as the option? What is the current stock price? What's the current value on the option? Are you susceptible of being called away, or are you susceptible of losing money? And what is the best trading strategy to do? Now, we usually take care of that on a Friday. Now, my trading group's 5 days, Monday, Tuesday, Wednesday, Thursday, Friday. The first 4 days, Monday, Tuesday, Wednesday, Thursday, we're on at 9 a.m. so we can see what's happening. Monday, I do all my buys. I buy everything on Monday. okay? Because I'm going to make most of my money on Monday because there's 5 days. Monday, Tuesday, Wednesday, Thursday, Friday. So as soon as Monday's gone, I just lost 20% of my time value. Tuesday, that's 40% of my time value gone. So it doesn't make sense to try to get 1% on a Wednesday because Wednesday is only 60% left. So yeah, I do it on Monday to Friday. So Friday we jump on at 2:30 to make sure everybody has enough time to take a look at their positions so nobody loses anything. Okay? I'm trying to see how far we can go into the year without any losses out of everybody in the morning trading group. I'm curious. Okay, can I go all year without any losses? I don't know. We'll see. Scott, okay. That answers your question, Scott. Chasing Jack. Thanks a lot, James. You made Monday fun again, and Friday's more exciting. All right, Jack. Glad to hear it. WBA, yes, I am. DD, I remember WBA did eliminate their dividends. I understand that. World You Want to Live In, girl. Adobe. There it is. ADBE. Yeah. Okay. I see it. ADBE. Okay. Catch me tomorrow. We'll take a look at Adobe tomorrow. Okay. We're past 11:30. Karamat. Do you sell calls on Monday or any day? Usually all on Monday. No. Karamat, you got to remember how the numbers work. Okay, a weekly option, all right, you can buy a weekly option for, hold on a second. If I'm going to do this week, I'm going to sell the 7th February. Okay, it expires on Friday. When Friday comes and go, the options expire. So that gives me the week of the 14th to do it all over again. Then I got the week of the 21st to do it all over again. Time is a value. So if I'm buying the stock Monday morning, selling the option Monday morning, that gives me the most time value to sell from Monday morning to Friday afternoon, because then we do it all over again. But basically, I always do it on a Monday. It gives me the most amount of value. David AI, okay, dude, have you not seen enough of the Terminator movies? Okay, it's going to happen, and it's not going to be pretty. Because if you think artificial intelligence is not going to figure out, that humans are just a waste of space eventually, yeah. All right. Nismo, DCA, once in a while, yeah. David, LUV, that's Southwest Airlines. Love it. I don't have any at the moment, but if we'll take a look tomorrow, maybe. Felix, Justin, quantum computing infant stage, not 20 years. Thank you, Felix. Jonathan, lots of money. I'm glad it worked out for you, Jonathan. Donnie Lynn. Ooh, Donnie Lynn. Cool name. I don't know what that means. Uh-oh. Donnie Lynn, if you want, now I tell this every single night, if you have the desire, you can drop me a DM with your phone number. I will call you. Okay, I call everybody who gives me their phone number. Some people say, oh, wow, I can't believe you called. Yep. What is it just got in? Oh, Michael Martinez. Also, what's the DPY? I have no idea what DPY means. Sorry. Daniel, what's the sites you use these graphs and IPO tracking? Okay, Daniel, I don't do IPOs. What you're looking at here, Daniel, is what is called Think or Swim. It is a trading platform where you buy and sell stocks. Sea-Dog, S&P, dude, do yourself a favor. Check out the numbers. Okay, there's one number in particular I want you to pay attention specifically with the S&P. It's called the yield. Okay, I believe the stock is somewhere around $500 a share. Check out what the yield is. It's right there in Yahoo Finance. Okay, you go to Yahoo Finance, right here. You put in S&P. I think that's right. SP? No, S&P. Symbols S&P. Spiders. Okay, SPY. Need my glasses. Chart so far away. SPY. There you go. Are you ready? The S&P. Let's check out the spiders. Okay, same thing. Okay. The spiders, S&P 500 ETF. That's the dividends crap. I don't want to see that. I want to take a look at the summary. Okay, take a look at the summary. Okay, Sea Dog. Okay. You see that number right there, Sea Dog? Okay, the S&P. Okay, the SPY. The yield is, what does that say? 1.2%. Not for the week, not for the month, not for the quarter, but for the year. 1.2% for the year with the S&P. The SPY, spiders. Okay. Da-da-da. Andrea! Hey, James. Did you... Uh-oh. I missed it, Andrea. Oh, no. Oh, Andrea just asked me a question. Okay. Did you schedule the stock and tax trading class? Yeah, that was Saturday. I tried to upload it. I tried to send it to someone, but it got congested. But it's going to be on the, what do you call it? On the Patreon website. So you can go to the Patreon website and look for it. What are your thoughts on DOYU? Nope. Simply for me and you. Okay, simply for me and you. Thoughts on DOYU? No. Meta, Tony, seriously? Have you not checked how often they pay dividends? Hell no. Did we look at AA? No, Andrea, you're a little late. It's 11:45. I'm usually done at 11:30, but we'll take a look at AA tomorrow. Brian Spence, does Intel still pay a dividend? It's a good question. We can check that out tomorrow. What about Disney? We can check that out tomorrow. Okay, Jay Moore, thanks for me. You're welcome. Series seems too high. Series is too high at the moment. Berkshire Hathaway bought Siri. Something's up. Yep. Raphael, do you increase your 1% premium returns to 2%? Do you think you find enough weekly options? Raphael, if I get 2%, I'm happy. But I like to stick to the 1%. Makes it simple, makes it easier. PLTR does not. They have not even 1 year of dividends yet. Okay, so PLTR, no. Pepsi, we'll have to take a look at tomorrow. Did you reverse mortgage the house for fund your gambling? Nope. Should I reverse mortgage the house to fund my gambling? Cause and effect. I can't give you an answer for that one. I know nothing about that one. Jay Moore, yay, Generation X, way to go. What do I need to start with? A change in mentality means the way you think about investing. This is totally different than anything you have seen. Okay, this is for weekly returns. Nobody does weekly returns. My average cost goes down and I collect a premium. Cool. Sir, is there a recording of the process concept so that I can watch till I get it? Okay, Sidster, I hate to be the bearer of bad news, but if you go to YouTube, boom. Okay, so Sidster, if you go to YouTube, The 10-Minute Trader, there are videos. Have fun, dude. There's 860 of them. There's a lot. Yeah, they're all basically the same, talking about the same thing. Dividend investing for weekly cash flow. Yeah, you know, that kind of stuff. What do you need to start? Change in mentality. You got to think differently. Okay, let's keep on going. Yuri! Can't even tell what you're showing on your screen. Okay, Yuri, the screen here is live on YouTube. So if you're on TikTok trying to watch it on your phone, it's very complicated. That's why the screen here is live on YouTube. So you can pull it up on your TV and watch it. Now, Yuri, I like Nike. However, I would like it to come down a little bit before I jump in. You bought AM. I have no idea who AM is. World you want to live in, girl. Have you ever tried Tasty Trade? Now, I gave Tasty Trade a call because I need a prime broker. I'm not sure I can do a hedge fund in Thinkorswim. And I don't think Thinkorswim is considered as a prime broker. And I don't even know if Tasty Trade is a prime broker. But they do say you can call us and ask us questions. I called, and the person I talked to didn't have the answers I was looking for. Okay, BDJ, Merck, haven't looked at Merck yet. Scarlet Eye Visuals, bought Uber at 67 last week. You seeing it get to 120 this year? I don't even bother looking at it. Scarlet, terribly sorry. Uber's not 20 years old. Okay? Now, I like companies that are consistently profitable. Uber is not consistently profitable. Okay, Jason, what do I think about Alphabet? Does not have 20 years of dividends yet. Bunny, no, you don't have to do this. You don't have to do this while you're reading. Okay, all right. Okay, Bunny L, don't know what that means. To confirm your stats is covered call. Your strategy is covered calls. No, a little bit more complicated than that. How can I get involved? Well, Marlon, you can go to my the bio right there. It brings you to my website, The10MinuteTrader. Or you just send me what do you call it? A DM with your phone number, and I give you a buzz. We can talk. It might not even be for you. It's not for everyone. Okay? It's boring. It's consistent. It's the same things over and over and over again. I buy the same companies over and over and over again. Okay? If they're profitable, great. I'll buy it. Okay? And I don't look at companies that don't have a good track record of profitability. Chasing Jack, every case is different. In my personal experience, this really works for me at this point in my life. Cool beans, Jack. With two full-time jobs, where was it? With two full-time jobs, really hard for me to wait for a stock to go up. Jack, I'm hearing you. But with this strategy, I only need a few minutes on Sunday and a few minutes on Monday. Well, that's cool. John. Ooh, John, hold on a second. Thank you for your insight. Scarlet-eyed visuals, you're welcome. All right, that being said, it is 10 minutes to 12. I am way past 11:30. So you guys, I will catch you again tomorrow, because tomorrow is another day. Now, tomorrow's Wednesday. All right, same time, same thing. Lisa, thanks for stopping by. Have a nice night. Bye over there on Facebook land. Instagram people, you guys have a great night. And you guys over here on TikTok, have a great night. And John, Kagdala, Borjolsta. Have a great night, everyone. Oh, come on. Done and now. The end is near, and so I face